thought we all knew each other, all groups, but I feel like yours look very good.
Okay, I think we are ready to get started. Our last panel of the day, and I know there are a lot of people also in the overflow room still finishing up lunch. So I know that we'll get some more folks coming into the auditorium, but thank you for sticking around for our last panel. This is a much anticipated panel, and we are so honored and pleased to have with us the principals, the heads of some of our nation's most critical and important regulatory agencies. We have with us Governor Michael Barr, who is Vice Chair for Supervision at the Federal Reserve. We have Acting Comptroller Michael Sue with the Office of Comptroller of the Currency. We have Director Chopra with the CFPB. And then on screen we have with us Chairman Martin Gruenberg, who is the Chair of the Board of Directors of the Federal Deposit Insurance Corporation. So please help me applaud them and thank them for being with us here today. This is a rare privilege indeed, and I want to start out by sort of asking a level-setting question, and that is how you all are thinking more generally about artificial intelligence at your agencies. And Vice Chair Barr, if I can start with you, and then we'll just go through each panelist.
Well, thanks very much, Lisa, and thanks to the National Fair Housing Alliance for putting together this really terrific and substantive conference on such a critical issue in a very timely way. So I really very much appreciate being here and being with my fellow panelists. Let me kind of take it at a pretty broad, high level to get started. So artificial intelligence has important promise and important risks. And we very much at the Federal Reserve are looking at both sides of that. We very much want to encourage innovation within clear guardrails, within clear rules of the road. Artificial intelligence has been around a very long time. And the thing that we're seeing now is rapid adoption of a particular kind of artificial intelligence involving the use of large language models. And many of you have picked up your own version of open source software to play around with this. One of the really interesting things about it is that adoption of this technology has been very, very rapid recently. So long period of adoption, long period of research, development, and usage of artificial intelligence techniques, but with generative AI and large language models, very, very rapid adoption by the public over the last really year. And so that wide-scale usage is leading people to focus on this set of issues, but I know that you've been focused on AI issues as an organization and also individually for a very long time. So what are some of the promises? What are some of the upsides of artificial intelligence? It's possible that artificial intelligence, for example, could significantly improve the productivity of our economy. Artificial intelligence can be deployed in a widespread way using our existing, at least for now, our existing hardware. We've seen this rapid adoption, and the particular forms of generative AI that are being developed now have the ability to improve the productivity of their own R&D. And that means that productivity gains could be very, very rapid, and deployment could be very, very rapid. You can imagine using artificial intelligence to improve all kinds of things in our daily lives. Having a better assistant, a technical assistant who can help you start working on projects, or doing basic things that in communications that are repetitive and rote and can be done more efficiently with that kind of technology. Things like customer service that could be improved by joining artificial intelligence with human interaction. So those kinds of things might significantly improve our economy. But there are, of course, downside risks with all of that. One of the downside risks could be economic dislocation. Some jobs will be gained, some jobs will be lost, jobs will change, and that kind of change can have benefits and costs for different people in our society. When you think about artificial intelligence in the financial services space, again, there might be benefits and might be risks. You can imagine artificial intelligence helping to overcome some of the biases that we have in our human decision-making that have led to discrimination in the past, or artificial intelligence helping to overcome problems with data-driven machine learning approaches that we use today. At the same time, there are significant risks also for things like discrimination. So artificial intelligence, as it's currently being deployed, relies on the data that is out there in the world. And the data that is out there in the world is flawed. Some of it is just wrong. Some of it is deeply biased itself. The kinds of data we see, if you look at the internet generally, there's more content that's focused on white people than there is on non-white people. The kinds of information we have in the internet is imperfect. And so if you train a machine learning device, if you train a large language model on imperfect data, you're going to get imperfect results. So the data is important. People are also worried about what are the rules of the road for this set of machines? What some people call it the Constitution. What's the Constitution for this set of devices? So if we let machines do whatever they want, we could get outcomes that are really not humane in the basic sense, not in accord with our basic values. So we need to have rules of the road for AI that direct the AI to only do things that are consistent with our values. A second thing people worried about is called alignment. So how closely does the device, the algorithm, the set of interactions, align with those rules we've established for them? And is there alignment with reality? People are worried about the phenomenon called hallucination, where large language models using probabilistic techniques develop things that seem real but aren't. And a third area that I know you all have focused a great deal on is explainability. So can we actually show why a large language model, why a generative AI produced a set of results? And if you can't explain it, first of all, it doesn't comply with the law. And second of all, you worry about the kinds of outcomes that you might get. So those are the basic kinds of ways that we're thinking about this, again, at a very high level.
Thank you so much. And Comptroller Sue, if I can move to you, and then we'll hear from Chairman Grunberg, and then circle back to Director Chopra. Is that okay?
Sure. Okay. I think Vice Chair Barr laid it out really, really well. The only thing I would add maybe is that we are cognizant there is a spectrum. I think the term AI tends to be used in a pretty broad sense. And in that spectrum, we know that there's machine learning all the way to generative AI. And some of these have been around a little bit longer. There's a little bit more experience with it. And as regulators, we are keenly interested in controls and accountability. And so to the extent that there's more familiarity with how a model works and what it's being used for, there's going to be a greater comfort level with understanding how the controls around that, how the accountability with that runs. With some of the generative AI, I think there are some really hard questions in terms of who's accountable for some of these, because it's designed in a way that doesn't make it automatically predictable to who's ever designing the thing. And that interacts with the use cases. And I think on the use case side, so far, most banks have been fairly, have taken an appropriate approach to applying it for internal uses, for fraud detection, for back office. Once you start moving into more consumer-facing areas where the impacts on people and communities can have a really lasting impact, obviously the scrutiny and the concern level rises quite a bit. But to me, that's fairly intuitive. I think putting that into practice is really something that we're constantly talking about and engaging with our peers and with our regulated institutions.
Thank you so much. Chairman Grunberg?
Thank you, Lisa. Let me begin by echoing Michael's point about the importance of this conference and in particular the leadership of the National Fair Housing Alliance in bringing issues of equity and fairness into the baseline of our consideration of implementing artificial intelligence. I really think your leadership here is critically important because as this technology evolves and is utilized, it built in from the outset, I think it is critical to have the potential impact and protections be built in so that we're not trying to repair damage after a technology is implemented, but rather address it beforehand so we don't have to engage in repair and after damage may actually be done to individuals. And in terms of how we're thinking about artificial intelligence, it may hold significant potential to address a lot of the things we care about in terms of expanding access to the banking system and access to credit. But clearly, this is a technology, however you define it in whatever form, carries a lot of complexity and challenge to implement. So from a supervisory standpoint, I think it will present a serious challenge to all of our agencies as we supervise our institutions as they consider and implement this technology and understand that there are risks on both the consumer protection side and on safety and soundness that we have to consider before the technology is actually implemented, particularly as Mike Sue indicated, before it actually interacts with the public and customers. So just want to underscore what I think is the importance of this conference.
Thank you. Director Chopra.
Well, Lisa, thanks again for putting this together. I thought it would be useful for us to respond to your question a little bit by reflecting on the last 10 years. My impression is that if we were to rewind to 2014, many in our community actually got hypnotized by the techno-utopianism about poof, discrimination is going to go away, and wow, everything is going to be great if we use big data and automate it. And a lot of people started to see, wait a second, actually that data, the bias is built in and reflects that, and all of a sudden we might have blessed something that was actually worse because it became harder to detect and it became more experimental on what was going on. And I think if we jump forward 5 years, 2019, I think we all started to see how the infiltration of larger tech players and others created a whole new set of issues. Obviously, NAFA's work and other work, and I will highlight the complaint against Facebook under the Fair Housing Act about discriminatory targeting, the use of behavioral targeting, and how that might be digital redlining at its worst. That was, I think, a moment for many of us to be able to all shift into thinking, wait, we have laws on the books we should use now, and let's use them. Obviously, we've seen a few uses of the Fair Housing Act. We at the CFPB have looked at almost all of our laws and regulations to make crystal clear what the existing law says. And there is no fancy technology exception to the Equal Credit Opportunity Act, the Fair Credit Reporting Act, and others. And we don't really care how you're marketing your special technology. If you can't give an adverse action notice, then you can't use it. If you can't give those reasons as to why someone has been denied, you can't use it. And yes, you will be accountable if you are trying to use technologies that are discriminatory but are not really subjected to the normal, robust testing that we would expect under almost any other traditional credit model. I think it's very important, Lisa, that we also remember financial services, housing has always used complex sets of data for predictive models. FICO, we could call it an AI if we want. It's opaque. We don't know what goes, well, we do, but the consumers don't know what goes into it. And I think we have to start making sure, I really like what the acting comptroller said and Governor Barr said about our values. We also have our values and we have our laws. So the CFPB has made a number of efforts to be able to clearly explain. We've taken some important enforcement actions, I think, with respect to how the Fair Credit Reporting Act would also, the reasonable, reasonable procedures to assure maximum possible accuracy. We have seen it in the tenant screening, employment screening, so much more. So I think we've got laws. We now need to put it into practice. I think a lot of us in this room have really thought about in the underwriting context or predictive decision making, but I want to pick up on the generative AI piece. That's a huge, huge body of work for the CFPB about how you will, the creation of content, communications, simulated that looks like humans. Let me share a quick thing. We did an inventory of a lot of the large banks' use of chatbots, and they name them, they give them a lot of female names. One is, the most popular one is known as Erica, and it's not a human. And actually, when you chat with it, you know how when you are using chat, there'll be those 3 dots when someone's typing? We have found that many of them almost are faking that they're typing. So what they're trying to do is create that type of experience. But the reality is that it involves a whole other set of challenges. And we have made clear that if you're giving deceptive information through your generative AI, you are liable for that. We have a lot of supervisory tools that we're using, and I know maybe I can get to that later, but I think a lot of what was put into place to make sure that the CFPB had strong non-bank supervision, oversight of key service providers, we're really putting that to work, and I'm happy to talk about that later. But we're now in 2024, right. And I think it's time to really reflect on techno-utopianism and how we've moved past that, and to really look at discrete harms and what we're going to do with existing law. And if we need new rules, like we're all doing on algorithmic appraisals and others, we are doing it on these data brokers using the Fair Credit Reporting Act rulemaking. We're ready to act.
Okay, so I want to stay with this point for our next question, talking about existing laws. Rohit, you mentioned that, and Meta mentioned it last night. I didn't bring it up, that NAFA sued Facebook under the Fair Housing Act. I think many people know that we also sued Redfin for digital redlining under the Fair Housing Act. So the point is that, and quite frankly, since our inception, we have been bringing lawsuits using both the Fair Housing Act and the Equal Credit Opportunity Act and the Civil Rights Act of 18. Mm-hmm. Yes, I said 1866, Reconstruction era law, to tackle and combat algorithmic bias. I shared with the audience last night, when we brought those earlier cases in the settlement, so if you look at our prudential redlining settlement from 1990-something, you'll see in that settlement, we forbid Prudential from using their algorithmic insurance scoring model. Same thing with Allstate, State Farm, Nationwide. We forbade the use of those technologies because of the things that you all have been talking about. We realized that it wasn't a techno-utopia, that these utilities were actually exhibiting and expressing harm on consumers and communities. And so, Chairman Grunberg, I think I'll start this question out with you, talking about the existing, we have a bevy of existing laws that we can bring to bear to address these issues. How are each of your agencies thinking about the existing authorities that you do have? We realize there's a lot of conversation in Congress about new laws, and we've been hearing throughout this symposium about new standards that we need to bring to bear. But what about the existing sort of lexicon that we have? How are you using your existing authorities to address these challenges?
Well, Lisa, thank you for the question. In many ways, I think it's the central question of this discussion. Because the point is that whatever the technology, including artificial intelligence, if it's going to be utilized by a financial institution, it has to be utilized in a way that is in compliance with existing law, whether it's consumer protection or safety and soundness or any other statute. And our agencies currently have authority to enforce those laws over the technology, including AI. So that if the technology is being utilized in a way that is unfair and deceptive, or discriminatory, or in other ways violates the law, our agencies currently have the authority to act. And you really want to be cautious in thinking about legislation in this area without first considering what will be the impact on our existing statutory authorities. And a good first rule here in legislation and in the utilization of the technology is, first, do no harm. We want to be sure to preserve our existing authorities and hold institutions accountable for the utilization of the technology. And of particular relevance, whether the institution is utilizing the technology directly, or also, and of significant consequence, I think, if the institution is relying on a third party for the provision of that technology. Because if it's a bank, if it's an FDIC insured institution, and that bank is utilizing a third party to provide services on behalf of the bank is accountable as if it were providing the service directly. So whether the institution is employing the technology itself, and in the case of AI, it would not be surprising if the institution may be utilizing a third party. The institution itself is ultimately accountable, whether it's the Fair Housing Act or the Equal Credit Opportunity Act or any other statute. And I think that ought to be our threshold consideration in discussing this issue.
Thank you.
I'll just add to what Chair Grunberg said. I think that the basic framework is right, which is generative AI or machine learning or a regression analysis, whatever model financial institutions use, has to comply with our existing law. It doesn't matter what label you put on it or what the underlying technique is. We've had in place for, I guess it's 13 years now, a guidance on model risk management. It's very well known. The financial institutions and banks understand what model risk management is and how they're expected to conduct it. If they begin to use newer techniques of artificial intelligence, including large language learning models, then they need to make sure that those comply with model risk management expectations. The same with our expectations as Chair Grunberg said, for use of third-party service providers. We have existing guidance on the use of third-party service providers. Banks are responsible for ensuring compliance with the law. They can't say, this other institution did it, it wasn't me. I didn't understand what they were doing, it's not my fault. That's not the way the law works. The banks are responsible for ensuring compliance with the law. And that's true for all the sets of issues we've talked about.
Thank you.
So I would strongly agree with what Michael and Marty just said about existing laws. And we don't, at this stage, I don't think we need anything new per se. I do want to acknowledge, though, some of these models are quite different from models that we're more familiar with, that models that have been used for a long time, that we have a lot of understood and familiar techniques and ways of having controls and risk management, model risk management, governance, supervision. And so the newness of some of these in terms of how they operate does require a lot of engagement by banks and by us to understand how we're achieving those objectives, which we all just, at a principle level, we agree with and don't necessarily need to change. But the how is important. And I think this is going to require quite a bit of engagement, especially since some of this is happening much faster. The development of some of this is happening much faster and involves data in a way that's different than what has been done in the past. And so, I wanted to kind of reinforce the framework is a sound one. I think those principles that have been laid out, and I think NAFA and others have noted that the principles in the model risk management framework are quite good. How exactly that translates into how does that apply to a particular methodology, which is actually quite fun under the hood, the way it operates is a bit different. I don't want to just wave that away. That's something that requires some work. And I think that's time well spent, but it doesn't require a kind of a rethink of the basic principles on things.
So I'm going to augment the question a little bit, Rohit, and let you respond to this augmentation. We have models in place that have been deployed for the past 35 years that financial institutions that are under your supervision, amongst maybe not all of you, but somewhere along the line, a financial institution hits the mark here. And those financial institutions have been using those models, credit scoring models, risk-based pricing models, marketing models, et cetera, underwriting models. And we're able to show that there are less discriminatory alternatives to those models that have been deployed. Lenders, I think, are arguing that they don't have full view. They can't completely pierce the veil of these models because they're proprietary. But the models have been sanctioned by some federal agency. And they have, in some cases, been required to be used by some federal agencies. So what do? What happens in that situation where we can prove right now today there is a less discriminatory alternative?
Well, I think obviously we all are quite familiar with the U.S.'s social score, FICO. And I think that it is embedded in so much of the mortgage system, so much of the way we have sanctioned a lot of standardized underwriting. I think that is one of many examples of models that maybe there are less discriminatory ways and more predictive ways to do it. You've asked actually quite a significant legal question in some ways.
Yeah.
And I think I want to be cautious, but also want to be direct about it, that we do have expectations that when you are using these models, you better be going through the process of rigorous testing, and you'll start seeing in our supervisory work and others that we have those expectations. But Lisa, I hope that we're all really clear-eyed that our long-standing ECOA and Reg B apparatus, we know that it is capturing a small share of the discrimination that is occurring algorithmically.
Okay.
So I think we want to be open that, yes, we have laws we can use today. We should use them robustly. There also needs to be a more positive vision about how all of this data should be used. I think many of us, I don't want to speak for others, we really think that a world with more cash flow underwriting, we have proposed rules under Section 1033 of our Act that will really allow people to provide their cash flow data in order to avoid some of these social scores and proxies. I think we need to have, obviously the regulators have prescribed their regulations on Community Reinvestment Act and affirmative lending. We have shared quite a bit about the use of special purpose credit and others. So I want, Lisa, us to think about how do we use the laws? Where might we need some other affirmative requirements, either in statute or regulation, and really reflect on what's working or not working. So more to come on this. I would be remiss if I did not add a lot of the legal thinking we do is to make sure that our enforcement and supervision will not be swept away by Section 230 of the Communications Decency Act, for which I have seen time and time again discriminatory or other unlawful activity seeking to go poof through broad immunities. We at the CFPB have successfully put forth some amicus briefs and others to protect our laws from being wiped away by some of these broad immunities, and I think that is a place we should all keep our eye on.
Agreed, agreed. And I will just give a shout out to DOJ, who really supported us in our cases against Facebook in particular, because they did the same thing that you all did. They submitted an amicus brief regarding those Section 230 exclusions and exemptions. So one of the other laws, and Rohit, I'm sorry, this will exclude you. I'm so sorry. The Community Reinvestment Act is such a critically important tool that many of us use to press for more equitable opportunities for people. I noted that in the commentary, and not all of these comments, they did not come from NAFA. They came from many other stakeholders, but there were lots of comments submitted sort of begging the regulators, the prudential regulators, to do a couple of things. One, look at the dangers and the harms that can be presented by AI, and to sort of make a determination that if an institution was using an algorithmic tool that was harming consumers, that they would get dinged in their score, and they would not get a satisfactory or would automatically get a needs to improve or some other more negative rating. And then there were other commenters who said the other thing, right, that AI can bring great benefits to people, and the regulators should look more favorably on institutions that use AI to, for example, create special purpose credit programs and things of that nature. So where did you all land on this issue, and how are you looking at it, particularly under the auspices of the CRA?
I'm happy to start, but then
sure.
we can to dig in. But just say at a broad level, under the Community Reinvestment Act, we require examiners to take into account the fair lending record of the institution. And if an institution has weaknesses in their fair lending program, that can result in a downgrade of their Community Reinvestment Act assessment. I think that's appropriate. We don't, in doing that, distinguish among the reasons for why they have weaknesses in their fair lending program. So it could be because they use a technology in a way that is not permissible. It could be because they use humans in a way that's not permissible. We're really technology agnostic on that. But if there's discrimination going on at the bank, they shouldn't be getting a good rating. That should definitely be taken into account and is under the rule.
And on the flip side of that, there's also, I think you had referred to the extent that it can help, there is room under the CRA for responsive credit products for that to help in terms of the assessment of CRA performance. And so it's not technology specific in the way that Vice Chair Barr just explained, but technology can help in terms of crafting those things that are furthering the purposes of the CRA, which I think we all here agree is really, really critical.
Thank you. Chairman Grunberg?
I don't know that I would have much to add other than, if an institution wants to deploy a technology that it thinks will actually have benefits for expanding access to the system, and for low-income communities. If they're able to demonstrate that, that would be a positive in terms of their CRA performance. And obviously, utilizing a technology in a way that would be discriminatory is explicitly accounted for in the rule, and would be a negative in terms of the CRA evaluation. So I think the new rule will provide opportunity in a positive direction, and as well as consequences if the technology is used inappropriately.
Thank you.
I should point out, by the way, that Rohit, as a member of the FDIC board, has been involved in the CRA rule. I wouldn't take him out of the conversation entirely.
Forgot about that.
Yeah.
Anything you want to add?
No, I mean, I think that they've got it. I would just share that as you think about all of these issues, we can't totally buy into, oh, we like AI, we don't. We got to look at their outcomes and the results.
Okay, I was just getting ready to say, it sounds like you guys are very sort of placing more emphasis on the outcomes.
Mm-hmm. Mm-hmm.
Well, look at the purpose of HMDA too. You see the data, the outcomes. I mean, this is part of why we have Section 1071, small business lending. We want to see the actual outcomes, not just some of the techniques involved. I'm sorry.
No, yeah. Chairman Barr.
Well, I was just going to say we care.
Vice Chair, I do that all the time. I'm so sorry.
No worries.
Listen, I upgrade everybody. That's just what I do. I'm like Beyonce. I will upgrade you.
I love that. I love that. Yeah. No, I was just going to add, consistent with what Director Chopra said, that it is about outcomes, but it's also about process. You need to have, both right in order to demonstrate compliance with the law. I used to, when I taught for many years at the University of Michigan, and when I talked to my students about what does it mean to have safe and sound banking practices, I said, if you are the CEO of a bank and you throw darts at a dartboard to decide who to make loans to, and it turns out those loans don't default, that is still not safe and sound banking.
I love that analogy. I'm going to have to steal that, if you don't mind.
No, don't mind at all.
Okay, Director Chopra, let me start with you with this next question. And it relates to how your agencies are using AI tools within your institutions for any of the work that you do. We, as you all know, at the National Fair Housing Alliance, we use a lot of AI tools for analytical purposes, for research purposes. We even build AI systems to conduct investigations. So I'm wondering how you all are sort of using these innovations within your own agencies.
So I want to be careful. Some of this is a little bit law enforcement sensitive, but let me tell you our philosophy on it. Our view is we can't really hear from the latest contractor or vendor saying this is the latest sparkly thing. Sometimes that's right, sometimes that's not. So what we have done, and I think through our fair lending program, the rest of our supervision program, enforcement, we have brought in the building a lot more people with very advanced technical skills. So it is not just, lawyers that are there. We've got people with, real skills and
lawyers
technology.
in the room.
Not that there's anything wrong with being a lawyer.
And they're able to, in some ways, crack the models themselves, find the less discriminatory alternatives, but also be able to evaluate the tools and systems that we may need to bring in-house. So I do think it does require a little bit of a different philosophy in terms of examination in some ways, using different means of monitoring, using different systems and processes. I think from day one, the CFPB has really tried to use more advanced tools, even just to understand the trends in our complaints, the trends that are happening in the marketplace. So I think you're going to see a lot more financial institutions look at bringing in new tools. And I think you worry a little bit about them converging on a handful of vendors. And it's part of the reason why, as supervisors, we're really looking at some of those vendors, because they may be the ones who are amplifying or managing risk and discrimination at scale.
Would you like to see?
Yeah, maybe a couple of things to add to that, because we're doing something very similar. One is that in terms of people, the OCC created the Office of Innovation in 2016. And at that time, a lot of this was on the frontier, it was on the edge. That made a lot of sense. That title made a lot of sense for that office. We've since kind of upscaled that and just turned it into permanent Office of Financial Technology, recognizing this is now part of the fabric of what we do. And I think a good indicator is the banks themselves are hiring a lot of folks that are not lawyers and accountants and MBAs. They're developers. They're quants. And so we need to make sure we have the right capacity internally to be able to deal with that and face off with that. That's really critical. The other is, for a lot of these newer technologies, we want to make sure that we are, everyone within the agency knows where all the guardrails are in terms of, we want to practice what we preach in terms of how we use these things. So on the one hand, we have controls on usage and access and information and education, and at the same time, encouraging folks to explore and learn these tools. And so we want to get that balance right. That's really critical. But we can't be in a place where this stuff is not going away. And we want to make sure that we are informed, facile users and familiar with it so that we can engage both internally and externally at the highest level.
Great.
We also at the Federal Reserve are using the kinds of tools that Director Chopra and Acting Controller Sue talked about with respect to the newest technology, with respect to things like generative AI. We're definitely taking a very careful and cautious approach. We have clear guardrails around the use in very controlled environments, staff with staff approval and so on. So we're being very, very careful in this space. And at the same time, we want to make sure we have access to the newest technology, that we understand it, that we have coders who are looking at this set of issues. The expression is hands-on keys, really deeply getting their hands around what's going on. We have data scientists, we have computer scientists, we have the diverse kinds of people in our institution that you'd want us to have to be able to understand what's going on in the world. We can always do more of that. We're always looking to make sure that we have the right mix of skills in our own analytic work, and then also, increasingly we need those kinds of skills in the supervisory process.
Thank you. Chairman Grunberg?
Yeah, just to add to what my colleagues said, with which I agree, we've also been focused at the FDIC on establishing an agency-wide governance structure for the use of artificial intelligence, which is being led by 3 of our senior executives, our Chief Information Officer, our Chief Operating Officer, and our General Counsel, and engaging all the divisions and offices of the FDIC so we'd have a consistent agency-wide approach to any utilization of artificial intelligence. And as we build up our personnel and expertise, ensure that the agency is engaging with the technology in a consistent way.
And Lisa, if I can add, I think we are really putting more effort into developing whistleblowers who are technical folks in our regulated entities. They're going to be a huge source of really good, high-quality investigative information about lackadaisical use of modeling, things that where they have said it's discriminatory, but an institution has turned a blind eye or gone ahead with it. All sorts of ways in which they have thought about the deployment, pre-testing of generative AI, and I really want to make sure, we've announced that over a year ago, but I really want to develop that further because I think that will be extremely fruitful for us as we want to tackle digital redlining and other harms.
Now, I'm going out on a limb here because I don't think I adequately prepped this question with you all, which I apologize for if I'm going off the grail here. off the
Rohit
rail
can answer.
here. Rohit will answer it. But I don't think it is too much. So obviously, each of your agencies are developing the skill set, building the infrastructure, building the tools, adding the people that you need in order to effectively supervise in this new generation, in this new era. Are you sharing information? Are you sharing knowledge amongst the agencies? And if I could go out on a little limb and ask about perhaps the enforcement agencies as well, because I'm thinking of HUD, I'm thinking of the FTC, I'm thinking of DOJ.
So I think, Lisa, you're very familiar with the capabilities we've tried to build at the CFPB around our chief technologist and others. They, along with others, have led a set of, in some ways, sessions bringing in state attorneys general, regulators, other enforcement agencies, and they've been really focusing on specific topics like crafting an information request or civil investigative demand, what to ask for, on site, what to look for. So I think there is a lot of work to be done to make sure that the people who are ultimately going to prosecute the financial institution from the beginning of the examination or investigation are equipped with the right set of skills, and that we're really leveraging each other in doing it. A lot of our partners, our state AGs, they will not have the resources to build in a lot of specialized knowledge on this. And I really see it as a huge demand of the CFPB to contribute to them when it comes to our consumer protection and fair lending work.
Thank you.
Maybe at the federal level, so we have the FFIEC, which is a body which includes examination agencies, and the purpose of that is really to ensure uniform supervision.
Okay.
And that process, there's a lot of groups in that process, so they collaborate quite a bit on issues like this, and that's for kind of the more outward-facing examination activities. Also internally, we have internally prioritized, like, let's get together and make sure that we're talking to each other in terms of our own technological development, and there's been some benefits to that because in many cases there's some overlap and we can learn from each other. So I think that coordination can have really strong, great benefits collectively for all of us as agencies.
Great. Vice Chair Barr or Chairman Gruenberg, any more to add?
Just a little bit to build on what's been said already, that part of this collaboration involves things like, can we do better at data collection using technology? We've developed a common exam platform in the Federal Reserve. Would other agencies like to, borrow from that, use from it, learn from it? There are areas where we're working together now on technological implementation that's not fancy, but really important, like making sure that as we implement the Community Reinvestment Act, that we create technology tools that are useful to communities and to banks in complying with the law. So technology is sort of pervasive. It's not all the newest discussion around generative AI, but it really is foundational to the work that we do.
Wonderful. Chairman Gruenberg, is there anything you'd like to add?
Just to say that I think all the agencies understand we're on a learning curve here, and that there's a necessity for us to work with each other to help each of us get up the learning curve.
Thank you. And we're almost out of time, so this will have to be my last question. I have 18 more on the list that I wanted to ask you about. So, Chairman Gruenberg, if I can pivot to you to start out with this next question. We have learned a lot through this symposium about several initiatives that have been undertaken by the White House, including the White House AI Bill of Rights and the executive order on AI. As independent agencies, how are each of your agencies beginning the work of implementing or looking at changes you may need to make, implementing those changes? And for example, if I can just ask, might we expect to see some kinds of modifications to the model risk management that Vice Chair Barr alluded to earlier?
Just a couple of points, Lisa. First, if anyone who looks at the at the AI Bill of Rights that the White House put out, or the executive order, and follows the discussion we've had today around issues relating to artificial intelligence, I think it quickly realized that the concerns we've addressed relating to AI are very much in line with and consistent with the AI Bill of Rights and the executive order. As you probably know, on its own terms, the executive order excludes independent regulatory agencies. But if you look at the key components of the executive order, ensuring the safety and security of AI technology, protecting consumers, protecting privacy, advancing equity, supporting innovation and competition, those are sort of the core values I think we've talked about today in terms of our agency's approach. And if you look at the core principles of the Bill of Rights, safe and effective systems, algorithmic discrimination protections, data privacy, notice and explanation, and human alternatives, I think those are all issues we are engaging with in our own work relating to AI. So even if the executive order doesn't technically apply to us, I think our approach, and I'd be interested in the thoughts of my colleagues, are, I think, very much in line with what the administration has put forward. And on the particular issue of model risk management guidance, I'd simply note that the current guidance we have is principle-based and includes consumer harm. So from our standpoint, the current guidance certainly can be applied to the kinds of issues we've heard discussed relating to artificial intelligence.
Thank you, Chairman Gruenberg.
So,
any more to add to what the chairman said?
The only thing I would add is, I do want to kind of build off of a point that Director Chopra made. We've talked a lot today about controls, the need for controls, the need to be cautious and careful, not to get too techno-optimistic about it. At the same time, having an affirmative vision is important because the system we have right now can be improved. It needs to be improved. And so to the extent that these models can de-bias, can do things better, can improve inclusion, we absolutely want to embrace and encourage that. I think we want to do that with a sense of humility. And we want to be careful about it because that has been oversold in the past. And I think that's something we are going to be looking for as we really want to engage to do that in a way that's rigorous, thought through, well thought out, and humble.
I'll just add, Lisa, that the CFPB was very involved in thinking through and working with the other agencies about the contours of the executive order. And of course, there is something housing specific in it that we are working with HUD and others a lot and thinking about some tenant issues. The tenant screening business, really, they must adhere to the Fair Housing Act, to the Fair Credit Reporting Act. We have taken enforcement action against TransUnion. We're looking at others and the FTC and feel that that's an important part of it. The order also encourages all the agencies to build up the technical capabilities in-house to be able to make sure we're collecting the right data and people and being able to deploy it effectively. I think what Chair Gruenberg said about we're all in a learning curve, but we know we got to move. And I think that has been a hopeful signal to the whole government. We're watching a lot, Lisa, also how the Europeans, the Chinese, others are thinking through how their government is approaching this. We know that many of the big tech players are really, they're global firms, and seeing how that works through the infrastructure across the technological ecosystem will be an important one. And I think the U.S. has spoken about where we are on this, that there's an important set of values we're going to be thinking about.
Well, I know we're almost out of time, so let me just take the opportunity to say how much I appreciated being part of this panel and want to thank again the National Fair Housing Alliance for your long-standing work in this field before it was a field that people spent time working on. So I really just admire the leadership and forethought you all have put into this.
Thank you so much. Please help me give a resounding thank you to our esteemed panelists. Thank you so much for being here with us. Thank you for your measured leadership in this space. Thank you for your thoughtfulness, the carefulness with which you are looking at this issue. And I just have to say, on behalf of the National Fair Housing Alliance and our 200 members from across the country, we so appreciate your commitment to fair housing and to fair lending, because it's not always the case that we have people in your role who have the level of commitment that each of you do to these issues that impact consumers so profoundly. So thank you for being here. Thank you for braving this weather. Michael and I are from the north, so I just
This is nothing.
This was
for you.
nothing.
I just want to say, you know, we were doing like this, but I digress. Thank you for braving the weather and being here with us today. We profoundly appreciate it. Thank you so much.
Thank you.
Yeah, thank you. Yeah, thank you to see. Thanks. Okay. Well, talking about braving the weather, so it's been a little over 3 years since I moved from Canada to the U.S., right? And today was actually the first time I used my winter boots. So